Hey guys, we are looking at GameStop once again, and we're going to go through some crazy DD on Reddit with a user that we've previously discussed on the channel before, who is really bringing out some excellent DD, showing that the hedge funds are still massively involved, and they're the ones causing the downward pressure in GameStop right now. Honestly, it's crazy the stuff that he's exposing. I'll be bringing more of the DD into the channel because it's some excellent stuff. But before we get into that, I just want to say thanks for watching the video, thanks for clicking on it, and please give it a like. You've showed me a lot of love over these last few days. So let's just head into GameStop's price before we do anything else, and then we'll get into the DD. So currently you can see that it closed the day at 178, and if we just go into the daily market, you can see it started off around about 184, hit highs of 187, and then it had massive downward pressure, about 5% on the day, well, 4% on the day, and is now at 178 and has gone up slightly in the post market, which is good to see. But if we just extend this out a bit, you can see that this line of support is still holding, which is very good to see. It's on the way up from where it was on the 16th, and we want this line of support to keep on holding. But then from other DD that we've seen, they're expecting some big price movements over the next couple of days. So let's just get straight into it. This is by the user G_KG, and he's brought us many interesting DD about Kenny and the shorting hedge funds. So this says, when Kenny sneezes, the market has a seizure, part 3. Got 99 problems, but a glitch ain't one. Going cross-eyed with crossed markets. So let's just get onto it. The smell of Hedgie fear. So this story begins, he was analysing the data from several glitches that occurred on last Tuesday, and I went through these in the previous video. These were where the prices were jumping up massively and immediately dropping down, and this was from hedge funds being involved in algo trading. It was the glitching, if you want to follow up the post, but he noticed something strange and he thought he had an error, but no. Here's the data that you can see, and it was for about 30 minutes. You can see we have the bid price and the ask price, and you can see they are actually crossing. They are almost the same, or where the ask price is higher than the bid, and these are very small amounts. So you can see they are, for all intents and purposes, the same, which is very, very, very rare. So let's just go back up. That's definitely a bit higher than the ask. So he went into Webs to find out what he was looking at, and this is a thing called a crossed market. So what is a cross market? A cross market is the name traders and market makers gave to a circumstance where the market's bid price exceeds the ask. It is an unusual circumstances and made even more rare with the advance of electronic trading. So the example would be here, you've got the bid, you've got the ask, it's crossed. The bid is higher than the ask, and that doesn't make any sense because if the bid is higher than the ask, then with algo trading as well, they'd be able to make lots of money off that. It's very, very rare circumstances. So a cross market is a situation that happens when the bid price is published higher than the ask. It usually happens in a fast market conditions where investors and traders are acting in panic, and these circumstances are more with electronic trading. Acting in panic. So what is the key thing? Well, he defines what panic is here, and then he's got an illusion of panic by Charles Darwin, expression Morgan's Man of the Animals, and acting in panic. So who is acting in panic is the million-dollar question, and it is not you and I, it is not the apes, it is the hedge funds. So once again, this usually happens in fast market conditions when investor traders are acting in panic. So, as he says, the hedges are panicking. So he had a look at some of the prices, and this is even AMC here. So you can see that he has this chart here, and this is the price going up and up and up, and then these are all these sweeps to buy, massive movements of the sweeps to buy, and then the price went down, sweep to sell, downward pressure on the stock again. So let's just go back to here, and then here's another example. This is AMC again on a slightly different day, same pattern again. So now we want to have a look at 412, what happened to GME, and it was going well, and then massive downward pressure, big volume, and then went down to 140. So what really happened during that time in the price it went down, you can see here, why did it go down? And let me just open this up in a tab. This was 9:30 when it went from 165 sorry, 160, 165, and then down to 140. And why did this happen? You can see that we have those sweeps to buy, sweeps to sell again, and then these are the cross-market instances here. Cross-market, 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 cross-market. There's a lot of instances of cross-market, which then in turn drove the share price of GME down massively. So that is the hedge funds trying to lower the price. And then there's another example again there. Who else wants to zoom in? 945 to 950. Sweep, 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 sweep. Cross market, cross market, cross market. Enhance. And then a later time here, once again, cross market. So it doesn't really do a too long didn't read, but it just trust only what you can see and verify with your own eyes. And that's basically the point of this, is that the hedge funds are still massively involved in this stock, and even AMC. And then the question is, why are they still involved in this stock? Well, because they haven't closed their positions. They've lied. The positions aren't closed. They are trying to cause panic in the market, lower the price, and in return make people sell, which is not the case. We do not want to sell. We want to keep on holding and holding and holding, but the hedgies obviously want us to sell. I mean, just look at those instances of cross markets, rare instances, but happened multiple times in this area, and then drove the price down massively. And then one actual interesting thing, this is the guy's email. Now, he's been posting this to their DD quite frequently. This is his email. He's actually been hacked. This is his email. He doesn't use Chrome as his browser, and not my location. And well, what's in Chicago? If we look at Gabe, let me just see if I can. Kenny G. Oh, sorry. Let me just quickly go to change the size of this, and we want to go to Citadel investment. Oops, Citadel. Chicago. And then we want to just go here and zoom out. You can see just off the Chicago in the, well, I'm not too sure of my American geography, Lake Michigan. And if we go back to the previous picture, let me just scroll you down right here, you can see that, oh, where's that? Chicago. So it looks like he's definitely onto something. The people in Citadel are on his back. So that is very interesting to see. Right, guys, just want to say thank you for watching. Please give a like on the video. I'll be bringing more DD by this guy because he is excellent, really going into next level stuff. Once again, the user is GKG. Honestly, some great stuff from this guy. It's truly is some real DD here. Right, guys, thank you once again, and I'll catch you guys next time.